Palantir is about to triple in price. After being critical of the company, they're now seeing the potential of Palantir. Analysts are praising Palantir left and right. But is this even possible? Is there even a solid path for Palantir to triple in price? There just might be a huge chance for this to be a reality. Let's not waste one more second and get right to it. Disclaimer: Palantir could now be on its path to tripling in price. This means that soon, their shares could possibly be trading at $100 each. Most analysts have been critical of their stock in the past. But now, this is all changing right before our eyes. Palantir Technologies has quickly become a leader in artificial intelligence adoption. As you already know, its AI tools are catching on with both enterprise clients and government agencies. These solutions are pushing the company to grow its sales and profits at an impressive rate. And a major boost came recently when Palantir joined the S&P 500. Since the announcement, Palantir's stock price has surged by 25%. And in the eyes of some, this is just the beginning. But we're not talking about just some random analyst. Hillary Kramer, an analyst with GreenTech Research, shared her thoughts on Palantir in an interview on Fox News. According to Kramer, Palantir is her top pick among AI stocks. She went as far as to call Palantir a true artificial intelligence company. This is such a high praise coming from someone of her caliber. The firm's ability to analyze data and offer actionable insights makes it stand out from the crowd. Kramer also mentioned that many of her peers underestimate Palantir's potential. With strong revenue growth and an expanding backlog of deals, she believes investment banks will eventually raise their estimates for the stock. According to her, Palantir can easily be a $100 stock. Kramer's bullish sentiment isn't surprising when you look at Palantir's numbers. In the second quarter of this year, Palantir reported over $670 million in revenue. This is a 27% increase compared to the previous year. But this is just the tip of the iceberg. On top of that, the company's adjusted earnings per share jumped 80%. One of the standout performers for Palantir is its U.S. commercial segment. Revenue in this division climbed to almost $160 million. Not only that, but the number of customers in this segment rose significantly, and the value of deals yet to be realized in revenue soared by more than double. This growth is a clear sign that Palantir is expanding its footprint and building momentum, and that $100 per share is just within reach. So, what's been driving Palantir's astounding growth? At the core of Palantir's recent success is its artificial intelligence platform. This generative AI solution is what's driving much of the company's growth. Palantir holds AIP boot camps where its engineers work with business and government customers to develop AI-driven solutions for real-world problems. This approach has been a key factor in Palantir's growth surge and is helping the company differentiate itself in the crowded AI space. Management at Palantir is also feeling confident about the future. For the second time this year, they raised their full-year outlook. The company now expects to bring in almost $3 billion in revenue this year. With its strong financials, cutting-edge AI platform, and recent inclusion in the S&P 500, Palantir is positioned for more growth. The stock remains a buy, and with analysts like Hillary Kramer pointing to the potential for it to reach $100, it's clear that Palantir's story is just beginning. As a matter of fact, another analyst has been wishing for more Palantir shares. It is at this level that Palantir is being coveted by those who are into tech stocks. Jim Cramer recently shared his thoughts on Palantir and tech stocks in general. On an episode of Mad Money, he commented, "I wish there were more to it," regarding Palantir. His point was that while Palantir has promise, it's not quite living up to its full potential yet. This isn't necessarily a knock on Palantir, but more of a reflection on how tech stocks are performing under current economic conditions. And here's what you need to remember. Kramer explained that tech stocks, including companies like Palantir, tend to shine when the Federal Reserve keeps interest rates high. High rates often slow the economy, but tech companies manage to perform well during these times. However, when the Fed cuts rates, things change. Investors start focusing on companies that can show significant earnings growth thanks to the lower interest rates. This shift in attention means tech stocks, even strong ones like Palantir, might struggle more than expected. He noted how confusing this can seem. Many people expect tech stocks to do well when rates drop, but that's not always the case. There's only so much money flowing into the market. After a rate cut, that money tends to go to companies that wouldn't have done as well if rates had stayed high. Stocks initially rise but then can't hold those gains. This leads to declines across the market, which is what we've seen recently. Kramer posed a question. Are all tech stocks now weaker because of this? He doesn't think so. And here's why that's exciting. He pointed out that certain companies in the tech sector will still thrive, even if they don't always perform well on down days. These companies, like Palantir, help larger businesses run more efficiently, and there's always demand for that kind of service. This is where Palantir's strength comes from. Kramer believes that some tech players will continue to be successful, even if the market conditions are tough. One of the standout points from Kramer's talk was about artificial intelligence. He emphasized how AI is driving growth, even for companies that might be seeing slower sales. Businesses using AI can improve their profit margins without needing to boost their sales numbers. This means that, even if a company's sales are down, AI allows them to remain profitable. This is especially true for companies like Palantir, which are deeply involved in AI-driven solutions. So, while Palantir isn't perfect and may not be soaring in the current market, Kramer sees potential. He believes that AI will keep boosting profits, even if sales aren't growing as fast. This is what could help Palantir and other tech companies stand out, even when interest rates and market conditions make things more challenging. In the end, Palantir might not be living up to all of its hype yet, but with AI as a strong driving force, it has the potential to continue growing. Their potential isn't just something everybody wishes, it's reality. As Kramer points out, the market may be tough right now, but that doesn't mean tech stocks are doomed. Some companies will still find ways to thrive, and Palantir might just be one of them. Because of this, there have been tons of funds who are bagging up on their Palantir shares. One of the recent ones include iShares US Technology ETF. They are a $19 billion fund that recently increased its holdings in Palantir by a little over 20%. That's an addition of almost 600,000 shares, bringing their total to almost 3.5 million shares. This isn't a one-time move either. The fund has been steadily increasing its position in Palantir quarter after quarter. This type of steady accumulation shows confidence in the company's long-term potential. It's not about hype or unrealistic expectations of a $10 trillion market cap in 10 years. It's about simple, consistent wealth creation. No trimming, just building a solid foundation. This ongoing accumulation by a major fund like IYW could positively impact Palantir stock. When large funds keep adding shares, it signals to the market that they believe in the company's future. It also reduces available supply, which can drive demand. Over time, this consistent buying can push the stock price higher, attracting even more investors. Palantir's growing relationship with institutional investors is a strong indicator of its potential success. All of these could also be the effect of Palantir being ranked the #1 vendor in AI, data science, and machine learning. On September 24, 2024, the company announced this recognition, marking the second year in a row it has been honored. The ranking comes from the 2024 AI, Data Science, and Machine Learning Wisdom of Crowds Market Study by Dresner Advisory Services. This ranking highlights their strength and leadership in the field of artificial intelligence. Winning such a title for 2 consecutive years demonstrates consistency and innovation. It also boosts Palantir's image in the eyes of potential clients and investors. This continued success in AI and data science sets Palantir apart from other tech companies. It shows they are not just keeping up with the competition, but leading the way in a growing and important field. This ranking can further enhance Palantir's market position and future growth. But what do you think about this? Let us hear your thoughts in the comments. If you are curious to find more, then make sure to click on one of the videos you see on the screen. And with that, we come to the end of this video. If you enjoyed the video, please like this video, and don't forget to leave a comment in the comment section. This really helps me with the YouTube algorithm. Also, please share this video with as many people as possible. Let's get this news out there.